want to just, as we finish up life insurance and annuities before we get into this massive topic of health insurance, I tried my best to find the true case for USAA. I couldn't find it. Strange case. I mean, essentially, this guy was found in his car. His car was run into a tree. He was tied up. He had injuries all over his body. And the police, and this is USAA's case. So this guy had life insurance from USAA. And it was really strange what was set up because there was an ex-wife and a wife involved. It was really, really bizarre. But the police never classified it as murder. They classified it as a suicide. So what they said, it looked like he staged, he wanted to make it like this mafia hit that he was taken out by some criminal gang, and it looked overly staged. And so USA went with what the police said, that it wasn't murder, that it was suicide. And so they denied his claim. I wish I could find it. I think there's actually, I don't know if you ever watched Forensic Files. I think there's actually a Forensic File episode on it because it was so bizarre, but I just couldn't find it. This article did come up. This is USAA, which doesn't really sell complicated life insurance, but this was related to Universal Life. They had to settle 70 million. Anyone who has owned a particular life insurance policy could receive $50 or more. Paid 90 million. The policy in question, the Universal Life Insurance. So that's not the most complicated one. That's as complicated as USA gets. Combine the savings and the life insurance. These offerings are common industry, but critics say they are overly complicated and ripe for abuse. Unlike standard policies, monthly premiums are not fixed and subject to change with market conditions. Because this case settled, there was no judgment. The lawsuit filed alleged that USA overcharged these policyholders with inflated rate factors out of what their own policies allowed, which are limited. My sense of this was a really overly complicated technical issue buried in the policy. It's not as bad as what I've seen some other companies do. Said the declaration that their expert calculated USA to have overcharged customers $360 to $460 million. The company disputed that, so they agreed. I'll let you say what I said. You can see it just sounds like something I've said in class. Said insurance companies began to offer complicated products in the 80s as a way to compete with banks and mutual funds. That sound familiar? Right out of the class, which has come to take an increasing share of consumer investments. Universal Life was one of the first products that emerged out of that time. The suite is not nearly as complex as other products offered in industry today. I said it's just a recipe for unethical behavior. That he worked for USA. They were one of the more ethical firms in the industry. So, you know, as a former USA employee, I didn't want to but I do believe that. Unfortunately, the guy after me, these company plans means it's more difficult. Let's see, he said something I'd strongly disagree with, but they didn't come back to me. Combined investment are vulnerable to abuse. These company plans means it's much more difficult for policyholders to understand what they're paying for. It shouldn't be widely used in the marketplace, particularly given the breadth of the financial instruments that are out there today. Yeah, he said something. It may have been a different article, but the guy who was quoted after me said, well, these products are okay as long as you go to a financial advisor. And I was like, no, that makes it even worse. But so they didn't come back to me to challenge his comment. So even USA, you know, is one of the cleaner players. These products are so complicated, and I think that's what killed USA. It wasn't that they're necessarily intentionally ripping people off. It was just the product was really complicated, so they interpreted it in their best interest, and the court said, no, you can't do that. You got to look at the other side. So you can always, with any insurance company, type the insurance company's name with the word lawsuit, and something will come up. These larger companies, they've all been sued for something. All right, I want to talk about longevity annuities. I'm going to actually show you the math later in class when we get into the actual pricing. So what is a longevity annuity? So with life insurance, you can pay like $50 premiums. And if you die early, you can get like a huge multi-$100,000 payoff. And the reason for that is for young people, so few young people die in their 20s and 30s that all those people who live are going to subsidize the few that die. And that's why such a small premium can produce such a massive payout. If you reverse that on the other end and you say, hey, if you live into your 90s, you'll get a huge payoff, and all the people who die early are going to subsidize you. You can create the same thing in reverse. So essentially what I'm going to do is all the people who die in their 60s, 70s, 80s are going to subsidize the people who make it into their 90s. I think it's a great product, but it's not offered about the industry. I'm hoping someone will sell it. This says it's a relatively new product, and this is back a decade ago. The insurance is a way to protect you from running out of money should you live too old. It's not a deferred annuity. A deferred annuity, you pay now and you're saving for a different time. What this is a deferred annuity where you pay and then you don't get anything unless you live. So it's a very interesting article. And the insurance removes some of the uncertainty about how much you can afford to spend in retirement. You can spend your portfolio more aggressively. That's really fits into your paper one. Your third article, annuities allow you to spend your corpus much more aggressively. Some companies allow your heirs to raise some of your money. If you do that, though, you're destroying the product. So to me, this is, you're going to see my idea of this product is that you wait until someone's 95, where very few people make it to 95. And so someone can invest, say, $5,000 and get a $500,000 payoff and make it to 95. Otherwise, they lose it all, and there shouldn't be any adjustments. You want that thing to really be a windfall for those people who live a long time because their money's running out. They show some products here. These are terrible products. So maybe I'll come back to this when I show you my product. I think my product's far superior. But so this person can pay $18,000 to get a $1,000 annuity starting at 85. It just doesn't sound all that good. I can get you much better than that. Financial stability of specific insurance companies many years in the future might be an issue. So you're buying something today that won't pay for 30 years. You better make sure you're with a company that's not going under. It was kind of funny. MetLife had one of these products. And so I went to MetLife because I just wanted to know what they were doing for my own personal need. He knew I was an officer at USAA, so he thought I was a spy come in and to steal their product, and I wasn't. And unfortunately, he said, it's not authorized in Texas yet, so I can't sell it to you. Strange fellow. He didn't explain to me how the stock market works. So, I'm VP of equities at USA, but he spent a long time explaining how stocks work. And then a few years later, he called me and asked if USA would hire him because he lost his job. So the guy was really bizarre. But anyway, I was hoping to get the inside scoop. Their product, I didn't like at all. I didn't think it was structured very well. So I'll show you the product I think will work. I think it's an exceptional product, but no one sells it yet. So yeah, the problem is these type of things they put into it. My product is you pay into it, and if you die, you get nothing. So that you can maximize for those people who live too long. But when you do that, what you pay in is small, just like with life insurance. So think about with life insurance. You pay in the life insurance and you don't die. Are you upset? Hey, I just spent $50 a month for a $500,000 policy and I didn't die. I want some of my money back. We don't think about that with life insurance. We shouldn't think about it with longevity. You pay in money. If you don't live, all your money goes to the people who do live, so you can maximize that benefit. So if someone turns 95, they can get $1 million check, even though I invested a very small amount because so many people died ahead of them. So these products that they give New York Life are just not that interesting at all. So the product I was trying to sell, and I'll show you the specifics, was a longevity product combined with an investment product. So they didn't notice this premium so much. It looked like it was just a little bit skimmed off the top. But then when they turned 95, boy, the windfall was massive. So I'll show you that one. All right, here's a product. I talked about this article a little bit, but I want to get into it. This is on the variable annuities. So variable annuity, it's a deferred annuity. You're investing for your retirement, but it's a variable product, so you can stick it in the stock market. And what this guy, Joseph Caramadre, that's like two Spanish words together, but my Spanish is so bad. Caramadre. He figured out that if he bought these products on people who weren't expected to live very long, he could essentially invest in the stock market with no downside risk. Because the stock market was up, he would get all of that, but if the stock market crashed and they died, he'd get all his money back that he paid in. So he found this out. He found a clause in the contract allows him to transfer a company's carelessness into a personal windfall. He called himself a modern Robin Hood. He was actually prosecuted. So the insurance companies say he's an unscrupulous con artist who engaged in identity theft, conspiracy, and 2 kinds of fraud. Now, you can tell me if this sounds like fraud. He deceived terminally ill. And why terminally ill? Because he couldn't have them living 5, 10 years. He wanted living 2 or 3 years, and then you have perfect protection from stock market crashes. His investment strategy was an illusion in which he preyed. So what he did was he went to these terminally ill people and said, I'll give you $5,000 if you'll let me buy this product on your life. And they're like, okay, sure, you give me $5,000. So I don't really see the harm to them because they're like, he just wanted someone whose life that if they died, he'd be protected from the stock market. He was still paying them off. He was essentially giving them money. The transformation of life insurance industry away from traditional business. So these products, just like we said, are very complicated. And so essentially what I love about this article is these complicated products, this guy figured out how to use that against the insurance companies. And instead of them using complexity to benefit them, he figured out how to benefit himself. He said, hey, they designed the rules. All he did was exploit them. The federal judge that first heard it was somewhat in his side. He said that he was just doing what the fine print allowed. Later, he got in more trouble, but these are variable annuities. There's a guaranteed death benefit with this guarantee if the market crashes, but before you die, your investment recovers. Your beneficiary still gets a lump sum equal to either death benefit or the value. So if the market's up, you get 150,000. The market crashed, you get your 100,000 you invested. You don't lose whatever money you would have had. He decided he wouldn't offer variable annuity clients in a way life insurance company envisioned. It was too expensive. So he wanted to find a way to get his clients the benefits without having to die. And he was buying it on people in which he had no insurable interests. He said, the law allows me to buy these products on people. So insurable interest means the person whose life drives the product, you should have some interest in that. So you have the policyholder and you have the life. They're saying there doesn't have to be any insurable interest between those 2 people. So he did his homework. There was no requirement that the investor and the annuitant be the same person. As he read the contracts, the annuitant didn't have to have any relationship. So one of his clients could buy an annuity on the life of someone who is not expected to live long and then pocket any profit when the person died. If they chose well, the account went up and they reaped the benefits. They chose poorly, the death benefit kicked in. So pretty smart guy. As competition intensified, their companies launched this. The companies essentially shot themselves in the foot by making these products too favorable. Later on, you can read the detail in the notes. He did end up getting several charges against them. I'm not sure exactly what they're upset with him on. The very last paragraph shows what he finally got. It's a long article, sorry. The grand jury issued a 66-count indictment against him and whatever his friend's name is. That 66 may sound high, but that may just because he did 66 policies or maybe 66 people. So I couldn't read the article, really see what he did that seemed too atrocious because it's really hard to say the people he insured, the lives were insured, that they lost anything. He paid them money to insure them, so they got a few $1,000, and then he had the policy. So to say that they were somehow ripped off or harmed just doesn't make sense to me at all. But it's just another complexity that this policy has. All right, so we've covered life insurance, term life, whole life, variable, universal life, variable universal life. We covered annuities, deferred annuities, payout annuities, equity-linked annuities, variable annuities. And we're ahead, and I want to be ahead because I want to have extra time to talk about health insurance. So any questions, anything we've done up to here? Have y'all asked your parents what insurance they own yet? Are you scared to ask them? With your retirement or their retirement, that will be your inheritance. Good chance now, it's a good time now. Also, a lot of life insurance companies approach UTSA students for sales jobs. So you somewhat now see what you would be getting yourself into. So you have some background. For most of you, I would suggest get your first job and see how much life insurance that offers. You'll probably get some free life insurance from there. And then if you're married with kids, buy some 10-year, 20-year term insurance. That may be all you need, is what I recommend. Maybe you buy one whole life policy, so you have something there at the end of your life, just in case something comes up, something cheap, maybe pays out 200,000 bucks, won't cost you that much. But beyond that, I wouldn't touch life insurance. I wouldn't touch universal life. I wouldn't touch any of the variable products. Equity link, definitely not. I just don't think it's worth it. But if you get confronted with a product like that and you're about to sign the bottom line, you can email me the product and I'll definitely give you my opinion. If you want a second opinion, I'll definitely, or if your parents have a policy you can't figure out, feel free to give me a call. So, all right, let's talk health. We'll get kind of started tonight. Because we went like 2 or 3 days over last semester, so I should have probably added more to the health insurance here. So if you look at Canvas, there's a place called Paper 2 Files. I'll show you the rubric to start with. So here's where you need, I'll try not to go too far tonight so you can organize. So let me give you some keys that you need to think about. Because this is going to be absolutely critical you do this right to save you time later. So this is a research paper. That means it's long. We're going to cover many sources over many years. You're going to discover a lot of these articles come from Obama's first term, because that's when everything was being talked about, because he got the Affordable Care Act approved and into law. So there's a massive amount of articles there. We've had another massive articles here recently. Some that show there's parts of the Affordable Care Act that are working pretty well. And so we've gotten some articles there. So professor provides the research, except, so one on your own, I guess I'll say that. So we'll talk about that more. So I'm providing the research. I'm going to ask you to go out and find one of the topics we talk about and do a little extra work research. I'm not asking for a lot. I'm not asking you to go out and read 20 articles, but one article and just provide some extra, or just a web page or something. It's massive and complex, so need to write paper in class as we go. All right, the bottom line, don't waste class time. All right, I can't emphasize this enough. So as we go, I'm going to show you the rubric with all the pieces. And as we cover an article, I'll talk about where that belongs in the rubric. What you're going to want to do is make sure you can find where I am in the articles. What you're going to want to do in your research is have good notes to talk about each topic, have some good quotes, maybe some charts. So as I'm going, you're going to want to be reading the article I am. If you see a really good quote you like, you probably want to grab it and put it into your outline and then put some notes beside it. So when you write the paper, it's all there. All you got to do is write around it and make transitions. Is everybody understanding where I'm going here? Write the paper in class. Now, how are you going to do that? I'd probably do it on your laptop. So if you don't have your laptop, make sure you're bringing a laptop every class. You could do it by hand. I'll go more slowly tonight so you can by hand take notes. Make sure you're doing some kind of notes. If you don't, this paper is going to destroy you. If you sit in class, engaged, watching your phones, whatever, you're going to waste all that time. And then at the very end, you're going to write this paper and it's going to take you 20, 30 hours to write this paper. But if you do it in class, you can probably get 70–80% of it done in class. All right, have I convinced y'all, or y'all still like, no, I'd rather be brain dead in class? Use the class time effectively, all right? So we'll essentially write it together. Why is it so massive? Because this is a really complicated issue. Tremendously complicated issue. It has many, many, many parts to it. All right. Questions on this? Now, on sources, I am not picky, all right? So you can have things like from an article from class or from article page 23 of, it says, right? I don't need you to say that it's from The Economist, not date. I don't care about that. All you need to do is say, if you quote something, I'm even good enough to say from article we covered in class, so-and-so said, and you just put that quote in there, okay? So we don't need a detail. Your bibliography would go on for 20 pages. We did a bibliography. There's just way too many articles. All right, I haven't even counted how many articles there are, all right? So that'll save you some time in class, so you don't have to go capture all that. But one thing I would emphasize, do mark page numbers. So as we go, if I'm on page 37 of the article, make sure you say, I got it from page 37, all right? So do keep track of that. So I'll slow down. What you need to do is, if I'm going too fast, say, wait, I need to organize my paper, all right? And just slow me down so you can get caught up. Everybody good? Anybody disagree? Anybody here like, man, this article's due around Thanksgiving. I'd much rather be incredibly stressed that week of Thanksgiving and wait to the very end to do this. If you're that kind of person, that's fine. But boy, that would be very, very unwise. Let's look at the rubric. And so I can scare you to death with this rubric. So the way it's organized, a high level outline is intro, size of the problem, causes of the problem, and solutions. All right, so that's the basic framework. Tonight we're going to talk to intro with 2 articles. We'll probably not finish both of them this week. The second article is much longer. The first article is only 2 pages. It's a really good article. It's a very old article, but it's perfect. It's perfectly written. It covers a lot in 2 pages, so it's really, really good. Then the causes of the problem, there's a bunch of those. I'm not really sure I like my organization, so we might move things around a little bit. You don't have to go in my order, but when you see the rubric, it's actually pretty smart to make the titles of your different sections match the rubric, even if it's a slightly different order, just so you make sure you cover everything. All right, so that's the high level. So are y'all ready to look at this? This is probably the longest rubric you've ever had in a class. So the size of the problem, the first article, we're going to cover this. And then a big section of this introduction side, you can see it's worth 4 points, is who are the players and what are their incentives? Incentives is a huge issue in here. One of the reasons our healthcare system is such a mess is we have a lot of players that are poorly incentivized. All right. There is a video I want y'all to watch. If I can get it to work, it keeps disappearing. It's old, but it's so good. I haven't found a better one. It's a PBS, one of those documentaries. If I can get that to work, I'll give y'all a walk to watch that video so that you can take notes on that. It's really an exceptional video. It covers everything we cover here, but with some incredible quotes from some of the doctors who talk about the problem with this healthcare system. It will probably scare you. If your granddad's saying he's going to go in and get some stents, you might talk him out of it after watching this video. Or if someone's talking about getting prostate cancer surgery or thyroid cancer surgery, you might talk him out of it. It has some incredibly insightful sides to it. So But the players and incentives is huge. And you'll hear doctors actually talk about, in fact, one of the doctors says, I'm paid more when I harm my patients. It's a pretty incredible thing for a doctor to say. I make more money when I harm my patients. So that's the incentive. A hospital, whether you stay in the hospital for 3 days and for 2 days, even though 1 day may be enough. So we'll talk about these incentives. We're going to focus on the US, but I'm going to show you a few articles from the UK because a lot of people talk about the UK as what the US should be. And the UK is suffering the exact same problems we are. They're not as expensive as our system, but they're suffering the exact same problems. So I'm going to show you, those you don't have to necessarily put in the paper, but I just want to show you, this is not a US only problem. It's really a universal problem. Healthcare is a tough one. All right, so that's the intro. Tonight, we're going to spend a lot of time on this very, very first one, that very first article. We'll spend on that. You notice I'm not asking you to read this stuff in advance because we're going to go through them. So that'll save you some time outside so you can keep working on your paper one and get ready for the exam. All right. Then the problem, there's a bunch of things in the problem. So I've got 21 things in the problem. You want to make sure, so as I hit an article, I'm going to try to stop and see where it fits in the rubric. So what some students do, and I don't know how well this works, you can try it, is to get this into Word. Y'all can see if that works for you. It works pretty well, doesn't it? So get that in Word so you can copy quotes over. So like tonight, we're going to talk here. You can have your notes and you can have quotes and you might have the source, article 1, page 1, something like that. You might do it like that. All right. So you copy the notes over. Or however you want to do it. If someone has an idea, anybody have an idea tonight how you're going to organize this, or is it still too early to think about it? Does this work, this approach? So think, if you think of something between now and Thursday, oh, this will work a lot better. I don't think Excel works because it's hard to type text in Excel. So anybody else get this to copy into Word pretty well? Y'all see where the rubric is? But you can see once you have this filled in, writing a paper is going to go from being a 25, 30-hour process to a couple of hours of just finishing it in at the end, adding titles and working. And obviously you can work on it between class to get ahead as you go. I make it due the week of Thanksgiving. You don't have to do it. You don't have to ruin your Thanksgiving break, but I really need that Friday, Saturday, Sunday, that Thursday, Friday, Saturday of, this is the hardest paper I grade. The last time I had this paper, it took me 30 minutes to grade each paper. And this is 40 people in this class, so you can do the math. I need 20 hours to grade this paper, so I need that time so I can get it back to you that next class when y'all get back from Thanksgiving. Also, I want to ruin your Thanksgivings. So you go home, you have that wild uncle, and I want you to have a huge debate about healthcare with that uncle and just completely destroy your Thanksgiving for your family. Wouldn't that be fun? You've always wanted to get back at that uncle for his crazy ideas, and this is your chance because you're gonna be armed with quite a bit of information. You still won't convince him because he's pretty well set, but you'll feel good about it. So, all right.
Or do you recommend like writing like a paragraph form or just?
Well, think about the ultimate paper. So you want the ultimate paper to be. This is a great paper to put onto LinkedIn because it's so massive. I like the 2 columns, thin margins. I like that approach. I wouldn't do that when I was creating this, but yeah, you're probably not gonna be able to keep. We're gonna have to go fast enough. You may not be able to write out in sentence form, but try your best so that when you get back and look at it, you know what you were saying. Make sure to emphasize this, or he made this point, or those kind of things. Otherwise, you get back to it and you're like, what were we talking about? And then you're kind of lost. You might also put the date of the class. Mark, to your point, let's say you're about to do something really, really massive and you don't have time. You could say 6. You could just put 6:30. And that way, if you want to go back to the video of the class, you can just click there and you've got it. Oh, it's about 30 minutes into the class. So, right, anything you can do to help you so that you're not like, wow, I have no idea what I meant there. But I will slow down. I mean, that's the key. Is like, wait, give me a couple minutes to catch up. So I'll definitely do that. I want this to sink in. I find this really fascinating. Previous classes, I've really gotten into it. We get some good debates and discussions. You're going to hear my biases, but I'm pretty sure I'm wrong on all of this because this is so complicated. I don't think anyone has the solution. And it probably isn't a solution out there that's going to solve everybody's problems. And that's one point I should have made up here. By solution, you get to ignore political realities. Your solution can be completely impossible for Congress to pass, but I don't care. What is your solution? You're king of the United States. You get to implement whatever you want to do. And I think that's the other thing, you know, with President Obama, I didn't like Affordable Care Act, but I understood why he did what he did. It was a very demand-focused solution. And I think the problems on the supply side you're going to see, but I understand why he avoided supply side because that's where you get crushed by the lobbyists and the money. Same thing happened to Bill and Hillary Clinton before y'all were alive. The Clintons tackled this and they got beat up by commercials from the health insurance industry and just absolutely destroyed them. Scary, scary commercials that came out. I actually like the Clintons' proposal a little better than the Affordable Care Act, but I understand why politicians, so President Obama had to do what he could get passed. I bet he would actually agree with a lot of what we're saying here, but the political realities is like, I can't touch that. So you don't have that. You're not running for office. You don't need votes. You can put a solution in that you like. All right. Any final questions on that? So that's that second section is the problem. And then the final solution is possible solutions. Now here, what's critical here is I do want you to discuss all of these. So if you strongly disagree with 2 or 3 of them, I still want you to discuss them. So you can put it up like one of the ideas we discussed in class was blah, blah, blah. I don't think this would work because, or I disagree with this because I think it's unfair to women, the way it's priced or whatever. At least address it, put your idea in there, show me that you understood the issue and then give me the opposite side, okay? Now, this other, actually it's not that many points. So it's more like 5%. Yeah, it's not as much. I said 10%. So other. This is other is for you to decide. And really what it could be something we didn't talk about at all in class, or it could be you doing something extra. Let me give you an example. So Bernie Sanders was proposing Medicare for all. Your other could be to go to his website and see exactly what he means by Medicare for all and write about that. So right here I have, that is one of the possible solutions is a single payer system. We eliminate, you know, Kamala Harris is not owning it now, but 4 years ago was talking about eliminating private health insurance and having a government run program. It sounds like she's backed off of that now, but Sanders was consistent wanting that. What did he mean by that? What does he say? So you could essentially go research his website and that could be your entire other and you get full credit. So you see, I'm not asking for a massive amount on the other. I want you to go out and delve into one of these in more detail. So there's the solutions. One of them, Michael Porter, we're going to spend a lot more time on. Y'all probably have heard of Michael Porter, Porter's 5 Forces. He's written some really good papers on his solution for healthcare, and we'll talk about it. It's called outcome-based medicine. You're going to hear it if we watch the video, you'll hear some outcome-based medicine in the video as well. It's a very different way to do healthcare. The article I'm using from him is very old because his more recent articles, I don't like them as well. So sometimes I have an old article just because it's the best one written. So I'm trying to actually save you some, a better written article, even if it's 5 or 10 years older, is better. Because not much really has changed. That's kind of the amazing thing. Not much has really changed. Even the Affordable Care Act did not radically change these issues. All right. So hopefully everybody sees where we're going. So the first trick is, does everybody have access to Canvas tonight? Anybody not? All right, so what we're going to do is we're going to start with this first article. We call it insurance. It's an old article, but it is still perfectly useful for today. This article does a couple of really good things on the rubric. Under the introduction, this first article really covers these two items. Define what insurance is. We've already talked about that in class, but he talks about it in this article. And then he talks about the players and incentives. He leaves one player out, which the second article will address, but we can definitely get the list of the players tonight. And he may not, he actually covers the incentives fairly well, but not as comprehensively as the second article. All right, so Article 1, I don't know how you're going to put it in your notes, but Article 1 is definitely going to be covering these two issues very well. Does everybody have this loaded? The other thing you notice is on the articles, I have them highlighted. So a lot of times you don't necessarily need to read the entire article. I have it highlighted because we can't get through all 300 of these pages of notes. All right, so the guy who wrote this article, so our first two articles, the reason I brought these first two articles is one of them is a guy far on the right. This guy is essentially a libertarian, probably votes Republican. The second article is a journalist on the left, a Democrat, and amazingly, they're saying the exact same thing, almost very close. So I want to show you that there is bipartisan support of this. If you get past the politicians who are getting paid by pharmaceuticals and hospitals, you can get past the people who are poorly incentivized. There's actually quite a bit of consensus on this. Now, you might think he was on the left because he was the commissioner of insurance of the District of Columbia, but he was appointed by the Republican Congress. So he was on the right. All right. I don't know if he's still around today. We should look and see if he's still alive. I'm doing a lot of articles from people who passed away. I don't know if that's he. That could be he. That's probably he there. Yeah, it's not a real common name, but that's about the only picture that keeps coming up. All right, so what does he say? So let's just read through what he's going to say. We will be kind of going through text in the class, or we'll be going through text. So ignore health insurance, just think insurance. What is something insurance companies can insure? Whether it's traffic accidents, tornadoes. So the first thing he says is, he doesn't use our jargon. He says it's very unlikely to happen. What do we call that? Low what? But we use two words, remember? F and S. Low F and high S. Low frequency, right? He's saying low frequency. Second, comes without warning. We talk about that as it's accidental. It's not planned. And third, it's unpleasant. All right, so you could do something like this. If you wanted to, see what he's saying. And then my notes are low frequency. It's accidental. It's a loss. It's a gain. So we're talking a loss. And you can edit it down. Some of the stuff is, try to get your notes as streamlined as possible. Now he's going to talk about severity as well here. The second article is really going to talk about severity. But an insurable event from our notes is low frequency, high severity. We also talked about it has to be accidental. What we talked about here is that moral hazard. We don't want people intentionally damaging their cars so they can get the insurance. So this is something that should be unpleasant for the person. And it's something that ever wants to happen. It's a loss. That applies to, and then he says catastrophic health. What does that imply? High severity. So that's what he's getting down to, essentially our class definition. Insurance is for low frequency, high severity events. He's going to talk a little bit more about that, but the second article much. That does not apply to what kind of health insurance? Routine. All right. You already see his argument. That's his bottom line. We're going to see that in the second article as well. We should not be buying health insurance for routine events. We should only be buying for things that happen very infrequently, and when they happen, they're catastrophic. So that's the base of his entire article. Let's see how he gets there. The current paradigm for the payment of healthcare tries to cover both of these, catastrophic and regular health, in one system. It's a built-in contradiction. Why? I love this phrase. I like this article a lot, so trust me, I won't be copying as much from other articles. The insurance system works best when the fewest people use it. The healthcare system works best when most people use it. The goals are incompatible. Think about this with your car. What if your auto insurance covered wrecks and routine maintenance on your car? And you go into an auto dealer, do you think they'll find something wrong with your car? Insurance is going to cover everything. You think you might need an oil change every 2 weeks, maybe? That's essentially what he's saying here. The healthcare, you walk into the healthcare system, what do they want to do? They want to treat you. What does the insurance company want to do? They don't want to pay you. I'm going to talk a little bit more about that because I actually have a little bit of disagreement with him on that. But it is an attempt to reconcile these. Managed care, we're not going to talk much about managed care, but HMOs, if you heard about those, health maintenance organizations, essentially the thought on that was you pay some monthly amount, and then when you go to the doctor, you pay a really small amount, $10, $20. And you say, well, that make people overuse the system. Yeah, but you have to go to only people that are approved by the system, and there's a gatekeeper. You have to go to a primary care, and they'll keep you away from the specialist. That's the idea. What we'll do, we'll try to keep, we'll treat people, we'll let them go to the doctor, but we'll keep them away from specialists. So we'll keep those costs down. Managed care at first looked like it was working, and then it just blew up at healthcare costs. And I saw this at USAA when USA went to managed care. Initially, it was okay. And about 2 years in, I was on the committee where they were talking about all their benefit plans. They're like, why has our healthcare costs skyrocketed? And it's managed care. You have a kid with a cold, you'd probably just give them some aspirin and keep them in bed. But you can go to the doctor for $10. Go to the doctor for $10. It could be some major, viral disaster or disease that 1 in a billion people have. You might as well go spend $10 on the doctor. So what happened at USAA is frequency skyrocketed. People are going to doctors who had never gone to doctors before. Why? Because it only costs you $10 to go to the doctor. All right. So he's going to talk about the managed care. Be interesting, when you get your first employer, you're going to find it really complicated, all these different options you have, exactly what it is. Is it managed care? Is it some type of other kind of product? So it infuriates healthcare practitioners and consumers because it limits or denies payments on grounds some treatments or services are not necessary. That's what the HMO is trying to do, is keep you away from those things that are expensive, that you don't really need. And then your doctor's saying, but you do need it. Legislators do what? This is a key word right here. Governments like to mandate. We'll talk a bit more about that. Governments like to mandate certain things happen, assuming there's no cost to that. And we'll get into that more, but Government say, hey, all these people are complaining that this health insurer is not covering this. We'll force them to cover it. Well, what does that do for everybody's costs? Now everybody's got to pay for that. You might not want that particular thing covered, but now it's covered. And now your health costs are going to go up to cover that because you're covering everybody else. That in turn frustrates insurers because mandated benefits throw off the underwriting calculations that were made and therefore result in losses or price increases or both. So mandates do what? They cause price increases. So not to get too, I can talk about old people, so I'm an old person. What if Botox was fully covered by health insurance? What would that do? Do you think a lot of 60 and 70-year-olds would be suddenly going to the dermatologist that weren't going before? What about those that, it's not going to make any difference? I'm just so unpleasantly unattractive, it doesn't matter. What happens to me? I don't get the Botox, but what do I have to do? I got to pay higher premiums to cover all those other people. You see the problem here. Should Botox be covered? Do you think? Probably not. So there are some debates on some other things that people ask, should health insurance cover that? But mandates, the way Congress thinks about it is a mandate, we're saving the consumer money. What they don't realize is we're saving some consumers money and we're making all the other consumers pay more. They don't think of it in those terms. They just see the one little group that's complaining, hey, you were going to have to pay $1,000 now and you have to pay $50. The rest of us now have to pay $150 for something we don't want. So you have to keep that in mind. That kind of gets back to the incentive. All right, so now he's talking about the players. Let's look at the players. Do y'all want to guess who the players are before we can get going? I mean, some of them are pretty obvious. What's the most obvious one? Round one, round zero. The patient. Does that make sense? Patients, consumers. What's the next most obvious one? If you have a consumer, who else do you have? Providers. Providers are what? Doctors, hospitals, and pharma, for the most part. Which of those is the biggest cost driver, do you think? It's actually hospitals, and we'll see that. A lot of people will say pharma because we hate pharma so much, but yeah, hospitals are huge. All right, well, we already mentioned another one. Who's another major player here? Okay, government, we'll put them down. He doesn't talk as much about them. I'm going to put them after the next two. How much of your healthcare are you going to pay for out of your pocket? Small fraction of it. Who's going to pay the rest of it? Insurance. What kind of insurance? Employers, for the most part. Won't most of you get your insurance through your employer? Why don't you just buy it yourself? Well, I'll talk about that. That is one of the solutions. It's this untie employment to health insurance. Are you going to get your auto insurance from your employer? Probably not. Are you going to buy your groceries from your employer? No. Why are you buying your health insurance from your employer? Insurers and government. Those are the main players. And then think about incentives. What's the incentives for here? You want to be healthy at a reasonable cost. What do providers do? They want to make money. What do employers do? He's going to talk about this in this paper. It's interesting the way he said it. Let me say it incorrectly first. Don't type this. Provide the best health care possible. Is that what your employer wants to do? What they want to do? The cheapest without upset employees. They want I can't spell cheapest. They want to provide the cheapest thing they can provide without it upsetting their employees and they leave for another job. So it's got to be adequate to avoid turnover. That's all they need. They're not going to do a penny more than that. So their goal is not to provide you the best care. Their goal is to buy the cheapest thing they can get away with. What do insurers want to do? They want to make money. How do doctors make money? By providing a lot of services. How do insurers make money? By paying as little as they can. So that's what he's talking about, these two. And what do governments want? They want to get reelected. How do governments get reelected? They pander to the loudest voices by increasing cost to everyone else. Does that sound too cynical? Anybody strongly disagree with that? Isn't that what they do? The people that are screaming, boy, they're going to get, stuff's going to get passed and done. The rest of us are just kind of completely unaware of what's going on. We know our premiums went up $50, $100, but we blame it on our employers. All right, so let's see what he says. Let's see if he adds anything to that. So healthcare services are negotiated not by affected parties. And this is pretty key for this. The patient doesn't pay for it, and the provider doesn't get the money from the patient. So the most important parties are not the payers. The payers are the employers and the insurers. They're the ones with all the money in this. So we got this incredible disconnect between who's getting the services and who's paying for the services. Now, I will argue that the patients are paying for the services. And we'll talk about this. You just don't know it because it's so indirect. But I know at USAA, we know exactly how much health insurance was for each employee. And if USA stopped providing health insurance, they would have passed that money on to their employees. Some people don't believe that, but studies have been shown if USA doesn't have to pay $10,000 an employee for healthcare, they will give pretty close to $10,000 to their employee in extra salary. We'll talk about that as a solution. Would employees rather have $10,000 and they buy their own health insurance, or would they rather USA? And we'll talk. What anybody know why you might prefer your employer? There's one word here. How about taxes? And talk about taxes, right? There's a huge tax benefit to the employer providing it. We'll talk about that. Can we get around that tax issue? For good and competitive reasons, employers try to find the least expensive plan they can. Insurance companies know this and try to hold down costs either by paying the providers less, which hurts economic viability of doctors and hospitals, or by cutting services to employees. So insurance companies don't want to cut claims because they want to make more money. They want to cut claims because they want to get more business from employers. So you have to remember here, this is something that's probably going to come up again. For insurers, this essentially is a cost plus business model. So from their standpoint, if they pay higher claims, they just charge more in premiums. So they don't have a strong incentive to keep claims down, other than they don't want to charge so much that the employers get upset. So it's a cost plus business model. So they almost don't care how much they pay out, other than the fact that he says, that if they can make as much money charging 10,000, they can make charging 12,000. They'd rather charge 10 because they get more customers from the insurers. So what's the answer? So you can see he brings up, is it universal coverage? And his answer is, I don't think so. But if you love universal care, that can be the big part of your solution. You can write that and you can tell me why you disagree with all the other solutions. All right, you're perfectly welcome to do that. I don't think government can solve these issues any better than private insurers have been able to. And the notion of a monolithic healthcare system run by government is scary to me. We'll talk about Medicare. If you want Medicare for all to be your solution, you're going to have to address the fact that Medicare is horribly bankrupt. I mean, the deficits are $30 trillion to $100 trillion. I mean, it's not a financially viable system. So you're going to have to figure out how you're going to solve that. Bernie Sanders may have that solution on his website. I've never heard him give a solution that makes sense. There's a lot of debate about how much that would cost. How much would payroll taxes go up? He says, well, but you're saving the 10,000 your employer is paying. You'll get that money. You can pay for it. But the system itself is so out of whack that premiums would have to be pretty high, but you can certainly see what he says and see what numbers he gives. Mark?
So he's saying it's not universal because it falls on employees and they're not the private party.
Well, he's saying universal is not the solution, not the solution. So what is the answer? He says this is, you might think this is the solution. So he's saying, I don't like Medicare for all. That's what he's saying there. Now, who is the largest insurer in the United States? Well, it depends on how you measure it. Is it based on number of customers, insureds? If that's the case, it's the private health insurance, it's Humana and those type. But if it's actual payments and claims, it's actually Medicare. Because Medicare has all these old people who are on millions of things. So Medicare is the biggest provider when it comes to actual payment of insurance. It's not the biggest provider as far as number of customers. So he doesn't like this. We will talk about the UK. UK is very, very interesting. UK is not just a single payer system, it's also a single system. So the doctors, the hospitals, they all belong to the UK government. So it's all one big, it's kind of like the VA. Y'all familiar with the VA in the United States, the Veteran Administration? That's essentially a single system. It's not single payer, but it provides not just the insurance, but also provides the health care. That's essentially what the UK is. So we'll talk about their system, and I'll show you, when I show you some of the articles, you can say, wow, this is the same list of problems we have in the US. So it doesn't fix those problems. You have to do other things. In fact, right now, with y'all seen the huge change in government in the UK, they're right now really dealing with their national health service, and it's a mess. It's not an easy problem to solve. And the UK citizens love it. It's kind of like Medicare and Social Security. You don't mess with it unless you want to lose the next election. So it's a tough problem to deal with. All right, so what's the solution? So we're gonna get to the solution. I've kind of already hinted at it. We must recognize that we're dealing with two tiers of healthcare, and these need to be separated. Can you guess what those two tiers are? Tier 1, catastrophe. Tier 2 is health maintenance and routine. All right. So he's going to say solution. So this really goes under solutions. So you might jump this down to solutions. Under possible solutions, y'all see that the very, very first one, this comes from Article 1. Health insurance for what? What's he proposing? The two-tier, which one health insurance covers? Catastrophes, another word for that. Low frequency, high severity. Out of pocket for everything else. That's his solution. That's also my biased solution, so I'll let you know already. I'll show you why I believe that. This sounds like auto insurance. Sounds like life insurance. This is insurance. You cover the stuff that insurance does really well. Why? Because remember, one thing on the problem, look on the problem on the fourth one. I want to bring this up now because this is important. It'll come up again. But remember, every time you pay for something with insurance, it raises cost 25%. So keep that in mind throughout here. Every time the insurance model touches something, raises the cost 25%. Why is that? Well, the Affordable Care Act says insurers must pay out 80% premiums in claims. So what does that mean? You pay for $100, they pay $80. So think about it. If you bought it yourself, it would have cost you $80. Instead, you're going to pay it through insurance. So you pay $100 insurance, it would have cost you $80. What's that percentage difference? It's 25%. You could have paid $80, instead you paid $100. You're paying an extra 25%. So every time you use insurance, the cost is going up 25%. That's okay for low frequency, high severity events because they don't happen very often. And there's a good chance that it'll never happen to you. So you're kind of okay with that. When it happens, you're really glad you paid that extra average. All right. So this is an important thing to keep in mind throughout. So one tier is catastrophic. And for that, insurance is the answer. Policies that carry high deductibles. Now, remember his high deductible is $5,000. Remember that when we get to the second article, because his deductible is much higher than that. I can't remember, it's 50,000 or 100,000. He has a much higher deductible. Why do you want high deductible? It keeps that cost down. When you have low frequency, high severity events, the low frequency keeps the insurance costs really low. You don't have to have all these claims adjusters. There's not all these bills going to the insurance company. Now, we're not going to talk about the upper limit. There are some policies that have a $1 million limit. There's some that are unlimited. That's one of the things people liked about HMOs is unlimited coverage. So if you get some rare disease and it's going to cost them $10 million to one of my bosses, he had an operation where they took his entire intestines out and spread them around the surgery room, and they did some procedure and put them back in. That must have cost a fortune. It saved his life. He came back looking good, but I was like imagining that. That sounds pretty serious to me. But yeah, you have some rare disease and there's only one solution. Yeah, unlimited. Why? Because so few people will need this that it's not going to overwhelm the entire system. And that's because very people get it. There's your low frequency. Such insurance will also cover the cost of any chronic illness and disease that exceeded the deductible. We're going to talk more about chronic illnesses later. What are we going to do about these baby boomers and the fact that they're on 6 pills and have high blood pressure and have diabetes and all these other things? What are you going to do with them? I'm going to give you a pretty radical answer on that you may not like. I'm not going to tell you if I like that answer or not. I'm just going to give you what someone proposed. So we'll get back on that one. The second tier is routine. For this, insurance is, I didn't put the italicized there. That's in his original article. Is not the answer. I see 3 possible options here. Out of pocket, just like you do with your car or your home, your insurance doesn't pay for your oil changes. Here's one of his solutions. For others, an employer-based system could be useful, not as a system tries to insure, but employers might be asked to provide medical savings accounts. That's also part of his solution. You go back to solutions. Hopefully I'm not losing you. You might hear them as HSAs or MSAs, health savings accounts, medical savings accounts. There's been a lot of talk on this. I'm sorry, I don't know why I'm screaming at you. So we'll get into this one a little bit more. There's a few articles that cover this more. So medical savings account is essentially a way you pay for healthcare out of pocket, but you do it in a tax favored way. So you get to put money in a medical savings account. It comes out of pre-tax dollars. So essentially your employer pays you $5,000. You don't have to pay tax on it because you put it in a medical savings account. When they initially did this and actually used some of these, if you didn't use it by year end, you lost it. Now they've changed it that if you put 5,000 in and you don't use it, it carries over to the next year. And some of them, it can go into your retirement plan at the end. Because you lost it, if you didn't use it, I only use MSAs when I knew I had a big bill coming. So I could at least get the government to, compensate me for 30% of it. So we'll talk more about medical savings accounts. I love them. I think they're a great idea. That's something your employer can provide. It's got some tax advantages, but there's no insurance involved in that. And then the last thing, and some government assistance for the poor. So there's some people that, $200 health bill is pretty material. They need some assistance. So there's something that the government can. he's almost kind of suggesting a government medical savings account that you provide to the poor, that they have something they can pay out of. So the employer take money out that would otherwise go into purchase health insurance and put it in the pockets of employees. So rather than an employer paying $10,000 for this massive insurance premium, they'll pay $1,000. They'll give you the other 9,000. The 1,000 only covers catastrophic. The 9,000, you can put 5,000 in the MSA. The other 4,000 you get to take home after tax. You decide how you're going to use it. It's your money. You do with it what you want. The third option, those not employed can't afford. Societies cover these costs is have government purchase membership for them in some prepaid plan. That's essentially kind of a poor person's medical savings account. He didn't think through that. Obviously, that needs a lot of work and a lot of discussion. Where would that money come from? I'm not going to give you that answer yet, but if you look under problems, under the third one, this is the largest tax break in the U.S. tax code. Health insurance is the largest tax break. The second largest is the home interest deduction. So where would the money come to help the poor? You're going to see my solution. I mean, it provides even more money, but there's like 250, $300 billion right there. You could free up to help the poor because the health insurance. And where does that tax break go? It goes overwhelmingly to the rich because they have the highest tax rates. So the way we do, and we're going to talk about this in more detail, so don't worry about it. We're going to show you the numbers. But this is the largest, by far, the largest tax break in the U.S. tax code. That's the first article. So is everyone keeping up with me? How are we going so far? Anybody got their paper written yet? I want to turn it in. All right. So there's article number 1. Let me show you article number 2. We won't start on it yet. So it probably wouldn't be a bad idea to set aside 30 minutes or so every weekend and just clean everything up. And maybe start making it look like a paper. That would probably save you time later on because, you know, we're going to cover quite a bit. So let's look at the second article. This article is also a book, and I have read the book. So he wrote this. I don't know which, if it's in, it may have been in the New York Times or something. So I gave you the article. Hopefully the article shows where it was. So he has a book. It's a pretty provocative title, How American Healthcare Killed My Father. So, you know, he probably got some readers just based on the title. I don't know if this was in the Atlantic. I don't know if this link still works. But he does have a book by the same title. The book is much, much longer, but it says essentially the same thing. So he's going to cover a lot more of the problems. We'll have to jump around a little bit more. So I'll do my best to try to keep you in place. But this one is also highlighted, just not in yellow. All right. So it's just highlighted like that. So, all right. Any questions on anything? Everybody's good? Have you ever done a paper like this before? Is this the first time in your life? All right. You can let me know at the end of the class if you like this better. I mean, I could have just given you a research paper to do and go out and find 50 articles, but we'll see how this works. All right, we'll start on here. Make sure I have you for attendance if you came in a little late. So again, you want to have your laptop open, slow me down, be focused, get your phones on airplane mode, focus. If you don't, you're really wasting your time because you got to get this paper written. I was looking through I have an article list of emails. I've got a lot of articles that I don't want to add because I already got too many, but I'll show you some of those at the end in case that's what you want to use for your other, rather than going through your articles, I'll just show them to you. Say, wow, I'm really interested in that. Send me that article. I listen to The Economist every week. Healthcare, they can go 9 months without an article, and then they'll have 4 or 5 altogether, depending on what's going on in the news. And some of those you'll see from just this year that I've seen that are pretty interesting. But what we're going to do now is, so y'all got the formats, everybody's ready to go. So what you're going to see in the second article, this is the longest one. So this won't take us a little more time to get through. After this article, they're much shorter. They go much faster. He covers a lot. Some of the things he covers, he'll be the primary source. A lot of the things he cover, he's going to hit on. We're going to see in more detail in other places. he hits a lot, obviously, from the title of his article, he hits a lot on the problems of healthcare. I get these TikTok-like videos. I don't know how they pick me for some of these, but some of them are hitting these issues as well. It's almost a conspiracy theory of the food industry is killing us. Doctors are over-treating us. There's one nurse I was listening to, I got her video, I might show it to you, of, if we can't make money, if we know the solution, but we can't make money on it, we're not going to show it to you because we got to make money. There's sometimes where exercise is the right solution, but I don't know who that is. It's someone on.
I always do it when I.
Is that you? Okay, well, we were having noise before, so I was make sure if it's Elijah, that's okay. But all right. So a lot of what he's sitting on, you say, wow, this article is pretty old, but I'm getting videos today that are saying exactly what he's saying. So nothing has changed. The Affordable Care Act did address one big issue we're going to talk about, which is the uninsured American. There's far fewer uninsured Americans today than there were before Affordable Care Act. Other than that, most of these issues are just as big of a problem today as they were before. So this man, he lost his father because his father went in for treatment for something that was fairly minor, picked up an infection, and ended up killing him. We're going to talk about how medical errors kill a lot of people in the United States. It's one of the leading causes of death in the United States. I'm going to say one article, a big part of it is because a lot of surgeons don't like washing their hands because it's beneath them, and that kills a lot of patients, so there's some serious problems here. We are going to talk about the most, this may be the only place he mentioned this. So under solutions, you can put this under solutions at the very, very end of the list. So hospital checklist, and I can put the whole thing in there, but this list from Novus. So it was a hospital error that killed his dad. It's simply someone not washing their hands or doing something. And you're going to see up at the top in the problems, poor medical quality care controls, that hospitals are killing us. And that's why I said that one doctor says, I'm paid more if I injure my patients. Because what happens when a doctor infects a patient? Well, now their revenue goes up because now they got to fix that. So by not washing their hands, they're getting more revenue. In fact, I wish I could find this source. I remember listening to it and being shocked. But a man said he was going around with this pro bono checklist, showing at the hospital, showing them how incredibly it reduces error rates. That patients' lives are being saved. People aren't having to go back for more treatments. And the CFO he was talking to said, why would I ever do that? That's going to kill my revenues. So that's kind of that's one of the attitude the hospitals have. We'd rather kill our patients because we make more money doing that than actually. So that's a solution to a problem. So you might link it back in your notes. It's back to this poor quality. It's the solution to this poor quality care. He's going to talk about that as well. But so sometimes you want to somewhat link. When you're writing your paper, most students do it exactly in this format. Problems, then solutions. A few students have tried to go, here's the problem, here's the solution to this problem. It's a little tough because there's some things that overlap. So I don't recommend that, but it will probably help you now to keep, when we do a solution that specifically hits a problem, to keep that in your notes so you know that's the solution to this poor medical quality care. You'll get a quote here. How many people do hospital mistakes kill a year? It's a few 100,000. It's one of the leading causes of death in the United States. So we'll get that quote here pretty soon. So this is an immediate improvement. Reduces infection rates by 2/3 within 3 months. You might quote some of this in that part of the paper if you want to cut and paste it over. Many physicians rejected this as unnecessary and belittling bureaucracy. Many executives don't want to push it on their prima donna surgeons. I used to watch Grey's Anatomy. I haven't watched, I don't even know is this still on? Is the lady that plays Grey, is she still around? So I don't know, but they had one episode on this checklist. And I watched it it was interesting. It's a little too soap operas for me, but I like the healthcare parts of it. And one of the doctors, she was pushing this, and it was interesting seeing how the doctors were pushing back, were upset. And she actually showed in the movie, by the end of the TV show, she had them convinced this was actually a good thing. They finally came in. But then they also showed one patient dying because a doctor touched something, got infected, and infected the patient, and she ended up dying. So, so this is even in pop culture. All right. So that may be everything on that one item, might be this one paragraph. If you take this one paragraph and put it there and restate it, you might have everything for that one list. Everybody's got what they need here? Is that you, Elijah, or is that somebody else?
Mercedes.
Mercedes. Yeah, Mercedes, make sure you're on mute. So we're really bad, if someone gets food poisoning, when we shut everything down, we shut down processes until we figure it out. But why are we okay? He says hundreds of thousands of deaths. We will get the actual number. I can't remember if he did it in this article or not. Why do we accept all these deaths due to hospital errors when it's so easy to fix them? I'll show you a quote later, but they put videos up in surgeries. And before they told doctors that there were videos, the overwhelming majority of surgeons weren't washing their hands. After they told them they were being videoed, like still 4% didn't wash their hands, but at least 96% did. Guess what I asked my surgeons before my surgery? I asked them, did you wash your hands? They'd find that really insulting, but it's like, I don't want to come in here for a minor surgery and end up dying because of some infection you give me. All right, so he's kind of coming up with who are the problems here. So this is a really key word. You want to somehow make sure you're thinking about in many places. This is word incentives. So he's saying these aren't bad people, they're just poorly incentivized people. As that one doctor said, I'm paid to injure my patients. If you make more money when your patients are harmed, then there's something wrong with this system. So what are the fundamental causes of our crisis? All of the actors, from doctors and pharmaceutical companies, work in a heavily regulated, massively subsidized industry full of structural distortions. You might be able to use that quote somewhere as maybe in your introduction. You'll notice that heavy regulation is one of the problems that's listed up above. Full of structural distortions. They all want to serve patients well. I'm not sure that's the case. I'm going to show you from one book some of the fraud going in this industry. There's certainly some bad actors in this industry, but they also behave rationally. Now, this is such a great quote. I don't know where you put it in your paper. All these players, hospitals, doctors, insurance companies, they all behave rationally in response to the incentives those distortions create. That is exactly right. So a 6-year-old man walks in the doctor's office. He's 75 pounds overweight. He smokes heavily. He's a heavy drinker. He has diabetes and heart issues. What do you think would solve his problem? Do you think? Just without a medical degree, what would you say? Proper diet, stop drinking, stop smoking, start exercising. What's the doctor going to do? Pills, surgery. Why? Because that's how he gets paid. So when we get to the very end, we're going to get to the very end and talk about this outcome-based medicine. Can you actually pay hospitals and doctors not for how much they treat people, but for how healthy their populations are? Right now, the incentives are what? To treat people, because that's how you make money. You don't make money getting people to the gym, getting them to eat right. In fact, you lose money if you do that, if they get healthy. I just read an article today. If you just do your feet, sorry, I don't have my shoes on, but if you just tap your feet, it has a massive impact on getting all that sugar that's going through our blood to the right place. There's really minor things we can do. Walking 30 minutes a day in fact, walking 30 minutes a day is a far better prescription for diabetes than diabetes pills, but doctors don't prescribe that. So you get these perverse results, incentives that emphasize healthcare over any aspect of health and well-being. That's another good quote. We don't want healthy people. We want people that are given care from the healthcare system. This is another good quote. This one works really well on the problem. You'll see a major problem right here. And remember, keep track of where you're getting these quotes from, all right? So this is article number 2. It's a system that emphasizes treatment over prevention. When we get the Michael Porter at the end, he's going to try to flip that over with his outcome-based medicine. It sounds wonderful. I don't know how, well, when we watch the video, we're going to watch the video where there are a few hospitals that are moving to this direction, and they're definitely much cheaper than their competitors, and their outcomes are as good or better than their competitors. There are some moving to this. So really key focus here is, why is that? Remember the word incentives. Pay, treat, not to cure. You're paid to treat people, not to cure them. What are you going to do? You're going to treat them. You can give them medicine. You're going to get them treatments, procedures, surgeries. Y'all know the saying, don't ask a barber if you need a haircut. Have y'all heard that before? So don't ask a surgeon if you need surgery, because they'll find something to cut into. They disguise true costs. We'll talk about more in other articles that favor complexity and discourage transparent competition based on price or quality. This is actually a pretty critical one we're going to talk more about. In the solution, most patients don't know what they're paying for, and they're not paying for it anyway, and there's no information on quality. We'll get into that quite a bit. That's pretty important. I mean, if a family member has a major surgery coming up, would you want to know which hospital has the highest quality ratings, has the fewest deaths, fewest bad procedures? You'd say, well, I'd like to know that, but they're all pretty much the same, aren't they? And they're not. They're pretty radically different. There's some error rates that are 2% versus 20%. That's a pretty big difference, 10 times greater chance of someone having serious problems. But there's no information on pricing. When the consumer, the ultimate consumer, the patient, doesn't know what they're paying for, and they're not paying for it, and they don't know the difference in quality between different hospitals, they can't be consumers. Notice in the rubric, one of the solutions is unlock consumerism. So he's somewhat in, how do we make consumers of healthcare behave like consumers of milk or coffee or shirts or cars? How can we change it so they have more information, they understand quality, understand price, and they can make informed decisions? The result is a pyramid scheme rather than a sustainable financing. Remove the consumer from our irreplaceable role as the ultimate insurer of value. So y'all see major problem there. The solution is, how do you fix that? How do you get consumers acting like consumers? There are 2 parts of that. They've got to pay for it, and they got to know what they're getting. So we've already seen that in the first article. Remember, how do you get them to pay for it? Insurance only covers the most severe catastrophic events. It doesn't cover all that daily stuff. So if they're paying out of pocket, we'll see later. We're going to see some examples. You need a blood test. You can have it. You can get it 2 minutes away, or you can drive 30 minutes. 2 minutes away, it costs $500. 30 minutes away, it costs $50. But your insurance pays for it either way. What do? You go 2 minutes away. What if your insurance company says, hey, if you'll drive 30 minutes, we'll pay you $50 to have it there? What would you do? So you see, I'm trying to give you some ideas. How do you change the incentives so the consumer acts like a consumer? The consumer doesn't even know it costs $500, right? Because the insurance is paying for that. But if the consumer knew, and there's actually, I'm going to show you a website there are actually businesses that will pay patients to drive further to get it cheaper, and they'll actually compensate them for that to try to get healthcare costs down. So we'll talk about that as well. But this idea of how do we get the consumer involved here? The comprehensive reform so he's going to talk about Affordable Care Act here. It hasn't been he doesn't know it yet because it's still being worked on while he's writing this article. Comprehensive reform being contemplated merely cements in place the current system. So what does he hate about the current system? Insurance-based, employment-centered, and complex. It addresses the underlying cause of our problems only obliquely, if at all. And in fact, what he's arguing, and I actually believe this, by making the Affordable Care Act all focus on the demand side, let's get more people insured. Essentially, what we're doing is they're pushing more customers into a really horrible system. And hospitals love that. Yeah, give us more customers. We can overcharge more customers. We're really good at that. So it doesn't address the underlying cause. So you're seeing my bias. This is a supply side problem. It's not a demand side problem. Politicians are scared of the supply side for good reason. They get more votes focusing on the demand side, but it's not fixing the problem. If you look at my solutions, some of the solutions we're talking about, one of them is, some of y'all might find this pretty radical, but stop getting health insurance through your employment. Buy it yourself directly, and only buy insurance for the highest severity, low frequency events. Essentially, we're going to eliminate health insurance. So he's saying very much the same thing as our first author, even though he's coming from the exact opposite side of the political spectrum. So we got to fix the problem of incentives. Our reforms won't do much good. They may actually do harm. So he's saying the same thing we've been saying here. He's a journalist, so his quotes are a little bit better. Mark.
Do you recommend on the paper breaking into articles, or more of like taking article 1, article 2, and saying like this is what they believe the incentives are and like who the players are? Or
I would, if 3 articles say the same thing, I would really focus on one that says it best. Not trying to say, hey, this one also said it, this one said, are you going to be too overwhelmed with the volume? So you might say, hey, here's a quote, and then 3 articles later you find a better one, then just put the better one there, and maybe you could kind of strike through the first one and keep it there just in case. But you're really looking for good quotes, but also good understanding. Who said it better to really understand it? So his solution, and you're going to see very much the first articles, is how do you fix this? We need to reduce insurance, focus the government on protecting the poor, make sure we understand what we're paying for, so get rid of the hidden subsidies and manipulated prices, the undisclosed results, and rely more on ourselves, the consumer, as the ultimate guarantors of good service, reasonable prices, and sensible trade-offs between healthcare spending and spending on all the good things. Right, this is this solution paragraph. There's a lot packed in there, and that's like 4 or 5 lines in my solution list. But my solution list includes reducing the role of insurance. Now, Kamala Harris in the last election, she was eliminate health insurance entirely and essentially go to a Medicare only system. She's backed off of that now. It does freak voters out if you talk about taking away their employer provided health insurance. But this is what this is saying, not get rid of it entirely, but greatly reduce it to just those major expenditures. I saw an article, I thought it was pretty humorous. A woman, her company had increased deductibles, so her out-of-pocket went up $500, but her insurance premiums went down $750. So she saved $750 on premiums, but she might have to pay an extra $500 for coverage. And she's like, I don't know what I'm going to do. What if I have to pay that $500? Which I was like, but you have an extra $750. But that was her thought process. I should never pay healthcare out of my pocket. That's unfair. So she would rather not get the $750 and be covered for the $500. It makes no logical sense, but that's the thought process a lot of people have, is insurance should cover everything. So there is somewhat of a psychological barrier we'd have to go overcome in the United States. All right. So before we fix the system, and it's too late because Affordable Care Act already happened, we need much clearer understanding. What did former President Trump say in the debate about healthcare? I'm thinking about a plan. I don't have one yet, which is amazing to me because the Republicans had the 4 years after Obama, so, and why did I say that? Because you get absolutely crushed once you put details out there. Obama figured that out. Clinton figured that out. You're almost better off saying, I got a plan, I'm working on it, it's really good, and you'll see it, it's really great, it's wonderful. But I can't tell you the details because once you go into details, you get crushed. But he's saying, let's understand these problems before we try to fix the system. All right, so he said something really, really interesting here. I don't have it on the list, but I'm not sure exactly where we put it. So yeah, this one's an interesting one. So essentially what he's saying is, let's look at everything we're spending on healthcare. Let's take all those dollars and let's ask, is there a better way for us to divvy that up? Should we really be throwing all this money at hospitals and pharmaceuticals and doctors? Could we spend it much more wisely? So he says there's things like education, public safety, environment, infrastructure. Think about the people in Flint, Michigan. Do you think they would have liked to have someone spend a little more money on their water quality instead of, lead poisoning all their kids, which stunts mental development and education, all that. We're giving up on a lot of good stuff for our health, our well-being. We're losing out on it because we're pouring so much money into this healthcare. By what mechanism does society determine an extra 100 billion on healthcare will make us healthier than 10 billion on cleaner water, 25 billion on nutrition? Nutrition is a huge one. I don't know if y'all see all these articles. I can't keep track of it. I just saw an article. I love grapes. This woman on this video, she's like, eating grapes, that's like having chocolate cake. It's like, give me a break. Grapes have got to be healthier than chocolate cake. I'm gonna keep eating grapes because I really like them. I'm 4 hours on a bike a day, so I'll probably burn off the sugar anyway. But that is a big thing. We eat way too much sugar in the United States. Can we get better at nutrition? Right now, it's a problem because everybody's contradicting each other. I don't know what to do. 5 billion for parks, 10 billion for recreation, 50 billion for vacation time. Is there something that would actually make us healthier than just the hospitals and pharmaceuticals? He wants to show how bad incentives cause things like housing market bubbles. You don't really need that. But I will mention that the housing tax credit is the second largest tax benefit in our tax code after healthcare. And he's saying, see, there's a tax benefit. We give people a tax benefit to buy houses, and they create a housing bubble. Why? Because it distorts demand, raises prices. He's saying this is the case with employer-provided healthcare. Distorts demand. Why? Because you're not paying for it. The insurance is paying for it. So you use more of it. It raises prices. Why? Because if you're going to go use more of the service, that service can raise its price. And since you're not price sensitive because you're not paying for it, they can get away with that. This sounds like a college education, doesn't it? All right. Making us poor by crowding out other possible beneficial uses for resources now airdropped on the healthcare. He's going to give us the actual number here. This one might fit under the eliminating health insurance except for catastrophics. But you will hear politicians say Americans have no health care. Well, what they really mean is a lot of Americans don't have health insurance. So do we let people die in the street because they don't have health insurance? No, hospitals have to treat them. There is indigent care. Hospitals can't turn a dying person away, supposedly. I've seen some videos that question that, but so Americans have health care, but they may not have health insurance. Why do we mix those two? It's almost back to that first article. We call it insurance, but that's not healthy. Don't mix healthcare and health insurance. But listen to politicians. When they say healthcare, are they really talking about health insurance? And are those two things the same? If you think they're the same, you're going to have a really horrible solution. All right, so here's back to the first article. We have some overlap. Health insurance is different from other insurance. Health insurance is the primary payment mechanism, not just for unexpected large expenditures, but nearly all healthcare. We've become so used to health insurance, we don't realize how absurd it is. We can't imagine paying for gas with auto insurance, or electric bills with our homeowner's insurance. And this is exactly what I say. We assume that someone else is going to be paying most of our healthcare bill. We're almost offended when a doctor says, hey, you owe $20. It's like, what, $20? I was only here for 2 hours. I can't believe. Most pregnancies are planned. Now, I don't want anybody, sabotaging my car. I'm not saying, he is saying it, but I'm not saying people should pay out of pocket for pregnancies, but he is actually saying that the health insurance should not cover any pregnancies. Deliveries are predictable many months in advance. Yes, they are financed the same way we finance fixing a car after a wreck through an insurance claim. So it's so ingrained, we forget that its rise dominance is relatively recently. Okay, he's going to talk about the tax code. So on the tax code, y'all probably know this. Well, you might know the history of why. Well, let's just get the basics. Health insurance provided by employers is before tax dollars, tax deductible by employer, never taxable. This is the only thing out there that is like this. Your Roth IRA, you buy it with after-tax dollars. It's not taxable, so that's nice, but you buy it with after-tax. Your traditional IRA, you get it with before-tax dollars, but when you take it out, when you retire, it's taxable then. This one has the triple benefit. You get to buy it with before-tax dollars, so it reduces your taxable income. Your employer gets a tax deduction, and even when you're paid claims, you never pay tax on this. This is a benefit your employee is providing you completely tax-free, and they get a tax deduction for it. Your 401k plan, they provide it with your before-tax dollars, they get a tax deduction, but when you take it out, it's taxable. All right, so this is a massive one. And why is that? Y'all know the World War II argument. Have y'all heard this story before? So World War II with wage controls. What did firms do? Government said, you can't pay your workers anymore. And firms said, well, we'll just give them more benefits. We'll give them more health care. And so the IRS had to decide, all right, can give them more health care. Is that taxable or not? And for some reason, the IRS said, no, that's not taxable. You can take the tax deduction, employer, but your employee doesn't have to pay tax on that. Could the IRS change that? Yeah, I think they should. So that's going to be one of my proposals. So yeah, I'm proposing we increase taxes on, especially on the wealthy. Why do they benefit the most? Because they have the highest tax rates. And so they get the biggest benefits. So this is one of those tax breaks that is heavily skewed toward the wealthiest Americans. It could have been, I really think it would have been a radically different, we'd be in a radically different place today if the IRS had said, no, that's taxable to the employee. If they originally had said that, I think we'd be in a radically different place today. Questions on that? So he might have a few quotes that can help with that, but this he says seemingly minor tax benefit not only encourages the spread of catastrophic insurance, but so employer says, hey, you know what, if we can't pay them more, not only do we give them catastrophic coverage, let's cover their routine visits. My word, we can't pay them more. We might as well throw everything we can into this health insurance and increase their pay without violating the wage rules. Employer-funded healthcare, the most affordable option for financing pretty much anything. It's the best way to get a benefit to your employee because it's so tax favored. The problem was, and in doing that, the cost of that healthcare went up so much that now we're kind of in this catch-22 of it's, they're getting this big tax benefit, but it's also costing them a fortune to get it. So it's probably a wash today. But when it started out, employers figured out, yeah, this is a great way to get benefits to our employees because we have this huge tax benefit. What about Medicare and Medicaid? We will talk about these. This is another comprehensive model. And it's no coincidence that the great inflation started with that. So this is another one that said, let's increase insurance dramatically, cover senior citizens. I'm going to show you some shocking numbers in the last set of articles on how skewed this is to the senior citizens and how young people are materially overpaying for this. That can't last forever. So probably when you become senior citizens, it won't be like that anymore. But right now, there's a massive shift from young to old related to Medicare, and you'll see it. I can't speak as much as Medicaid. So another example. So the employer started providing healthcare because of the tax code. Medicare came along, started providing these benefits, same benefits, comprehensive care. Insurance is probably the most complex, costly, and distortional method of financing any activity. That's why it's otherwise used to fund only rarely unexpected. Now, if you wanted to, you could take this quote and put it under the inefficiency of the insurance model. Because that's really what he's saying. Insurance is not a good way to pay for anything. And as I said, it works if you reserve it for a high severity, low frequency events. That way you keep that cost down, and it actually does society a tremendous amount of good because people can now live their lives without having to have these massive savings for these big events. But anything else, it's distortional, it's costly, it's complex, it's a horrible way to finance anything. Are y'all keeping up with me? Keep thinking I'm going to hear, wait, but not yet. Okay. Yeah. This is more you could put into that. It's just the health insurance system itself is expensive. I'll give you an example just from my own life. I went skiing, and on the very last run, you're tired, we're going back to the truck to go home. That's where I fall. I mean, I'm like, I can see the end. And so I might have broken my thumb, but I wasn't sure. So I go to the emergency room. They examine it. It's not bad. You just sprained it. Said, okay. Gave them my health insurance, went home. Well, my health insurance calls me and says, hey, you can't use that health insurance because your primary is USAA, you use UTSA. Said, well, okay, well, they're both the same provider. They're both Blue Cross Blue Shield. Said, yeah, but you use UTSA Blue Cross Blue Shield. You're supposed to use USAA Blue Cross Blue Shield. It's okay, well, that's fine, just shift it. So guess what they did? They called the hospital. They told the hospital to send them a check back. They wrote them a new check and mailed it to them, the same amount, but from a different insurance policy. Does that make sense? How much does that cost? It probably costs them as much to pay my hospital visit as it did. You know, it's crazy. Why couldn't they just shift it on their system? I don't understand. It's an extremely cumbersome process, extremely a lot of paperwork. It's just doctors hate it. So it's a very expensive system. Could it be better? Definitely could be better. The system itself is so inefficient. We could fix a lot of it just by more automation, more digital and all that. It still amazes me. My doctor faxes things to my pharmacy. How many of y'all use fax machines? I bet some of y'all have never used a fax machine. You want to hear never use a fax machine in your entire life? Yeah, my doctor faxes things to my pharmacy. When they say that, it's like, wait, did I go in the time machine? Is it 1985? What's a fax machine? Oh my word, it's crazy. So it's a very, very antiquated, inefficient system. Yeah, so we talk about the moral hazard, or really morale hazard. So he's just talking about the fact that we as consumers are not paying for the services we use, so we overpay for it. We assume every time we walk into a doctor's office, someone else is going to pay for this. So you don't focus on price. How many things do you buy on a regular basis that you don't care about price at all? So I may be like that with a vending machine. It's kind of ridiculous how much vending machines are, but that's $2, that's $3. Would any of y'all buy a car like that? I'm looking for a car. What range price? Oh, I don't care about price. You know, charging whatever you want to charge me. Would you do that with a mechanic? Can you imagine your mechanic? I mean, sometimes healthcare is like you go to the mechanic for an oil change and you come back and they give you a bill for $27,000. Say, oh, we decided to replace your engine. Would you be upset about that? Healthcare does that all the time. It's like, yeah, oil change. We decided, we saw a little scrape on your engine. We decided to replace the entire engine. So the information advantage that extensive training has given physicians or patients and the authority that advantage confers. So I'm going to copy this. I forget where this goes, but I'll show you here. So right here, it's, boy, I don't know how to tell you. I should probably number these, right? Can y'all find that one? Information asymmetries. It's right before government price controls. I'm going to show you data on this. Doctors can create their own will. I'll show you the data, and I'll tell it to you now so you can see the context. But there's been studies in cities that have excess hospital beds and cities that have a limited supply of hospital beds. And in cities that have excess hospital beds, the average stay for the same treatment is much longer than cities that have a shortage of hospital beds. Why is that? I mean, you've heard doctors say, oh, we want to keep them here another night for observation. They don't say, we don't keep here another night because we have extra doctor hospital beds and we can charge them for that. They don't say that, but let's keep them here another night. So supply creates its own demand. That information asymmetry, there is definitely some truth to that. Why? Because the person, they say, hey, doctor, what I need to be healthy, I don't care about price because someone else is paying for it. And the doctor's like, oh, you don't care about price? Well, you know, I probably shouldn't recommend this, but I can get away with it. So why don't you stay another night? It is not a good incentive system. So here he gives an example. If you want to bring, one thing you want to do in this paper is bring in some of these examples. One place you could get that extra 5% credit is find some more recent examples out there. I don't know what happens if you plug this into Copilot or ChatGPT to try some examples. You might try it. Do y'all have ChatGPT? Recent examples of medical fraud or medical whatever, you'll see what comes up. You wouldn't do a good job if you did the whole paper like that because I make it too complicated, but you could certainly find some specific examples. So Medicare spends twice as much per patient in Dallas, where there are more doctors and facilities per resident, as in Salem, where the supply is tighter. Why? Because doctors in surplus areas order more tests and treatments per capita and keep their practices busy. You might copy and paste that right underneath that one I just did. That would be a good example. There's many, many of these. We're going to see several of these. It's quite frequently done. We'll talk about ambulances and what happens. There's some almost humorous but sad stories related to ambulances we'll see. Well, okay, what we need to do is have Medicare control this. So let's have Medicare cut reimbursement rates on chemotherapy, anemia drugs. It's going to save 20%, but it didn't. Why not? Some physicians believe that colleagues simply perform more treatments and more profitable ones say, oh, you're going to cut that 20%? Well, I'll raise this 25%. Yeah, that's the power you have when you can create your own demand. So that's a quote, you know, find the ones that, you know, to Mark's question, find the ones that appeal to you the most, what really makes the case, and put that one into your paper as a quote, or find even more recent ones. This quote here, healthcare demand has no natural demand limit. We're going to see a contra argument to that. But several years ago, I was at a inflation conference, and oh, I just forgot his name, the famous economist, Milton Friedman. Milton Friedman was there before he passed away. So I saw Milton Friedman once in my life. And the guy I was with, he was an actuary I was with. He asked Milton Friedman about how to control healthcare costs and demand. And Milton Friedman made this comment. Healthcare is infinitely inelastic demand. It doesn't care about price. I mean, if you're about to die and this treatment will save you what? Oh, that'll save me. Oh, $2,000? No, I don't want to pay $2,000. No, forget it. I'll go home. What are you going to pay? You're going to say, what is insurance going to pay? I'll pay for it. We're going to see one example. There's a really sad one on the video. It's painful to watch. But this man has his mom in the hospital. She's comatose. She's been comatose. The doctors say she has no hope of recovery. It's going to cost millions of dollars to keep her there. And the son says, do whatever it takes to keep her alive. Why is he saying that, do you think? Who's paying for that? Medicare. What if he had to pay for it? Do you think he would change his opinion then, maybe? It's brutal stuff we have to talk about. But what he's going to ask is, rather that this woman that the doctor says has no hope of recovery, she's comatose, she's just going to be sitting in this bed with machines on her. It's going to cost a few $1,000,000. I think it was $5 million. He's going to ask the question, could we save more lives if we spent that $5 million somewhere else? I'm going to give you you can be controversial on this. I don't mind. No one's going to see your paper but me, but there's one paper I read that said, care, not cure anyone over 80. Is that too brutal? I'm not going to tell y'all what I think because I don't want y'all mad at me for controversial things. I actually don't know what I think. But people over 80, don't cure them. Just give them care so they're comfortable. You might say, as a 20-year-old, that sounds good to me. As a 79-year-old, you might say, well, wait a minute, I'm still pretty mentally ill. I just saw an interview of a woman, she was 103 years old, sharp as a tack. It's like, she looks like she's having a pretty good life. So, but that's what some people say is the care for an 87-year-old by giving them major surgery that might extend their life 2 or 3 years. If you spent that money on 3-year-olds, you would be extending much more life than you are with that person. That's kind of the tough thing. This is economy. This is economics. It's rationing. You have limited resources. If you spend $5 million here, you can't spend that over here. So, and the problem is when you ask people about their own lives, they're going to say, spend whatever it takes. Most of them. You're going to see some in that video where people will say, I've lived a good life. I don't know if y'all following Jimmy Carter. I'm a big fan of Jimmy Carter. Just as a person, really, really incredible man. He's still alive, isn't he? Rosalind passed away, but I think he's in hospice right now. Yeah, he's about to turn 100. I was alive when he was president. He's just a wonderful man. You can really disagree with him on politics and all that, but just a really wonderful man. But he was supposed to pass away some time ago. He was moved into hospice care. His wife, Rosalind, another wonderful person, passed away before him. But yeah, it's just he's like, no more heroic actions to keep me alive, just keep me comfortable, have my family by my side. We're going to talk about that, but there are people who will make that decision. In fact, we're going to talk a little bit later when you ask doctors what they recommend to patients, it's pretty aggressive. When you ask doctors what they would want for themselves, it's the exact opposite. Like, no, don't do that. Put me in hospital. I don't want that. I know what CPR and surgery means. I don't want that. I don't want the iron lung. So they're actually, what they want for themselves is not what they recommend to their patients. They actually recommend their patients something that's much more costly. All right, so he doesn't like health insurance. Neither did the first article. The greatest problem posed by our health insurance driven system in the sense that it creates that someone else is paying for our healthcare and that the cost of new benefits can also be borne from someone else. Unfortunately, there's no one else. You could put that in the intro. You could put it under the consumerism side if you like that quote. We won't get into this one, but if some people say we're paying our hospital CEOs too much, we're paying doctors too much, and the problem really is treatment. You could take all those costs out, and our healthcare system is extremely expensive still. So you can't solve it like that. We've got to stop getting treated so much. You can cut CEO salaries to zero, and it have very little impact on the cost of our system. All right, so y'all might not agree with this, but I've seen enough studies that this is at least 90% true. Is your employer paying for your healthcare? But in fact, your employer is paying that out of wages they would pay you. And so you're really paying for it. You may not notice it. Most employers try to let you know that they're paying for it. So USAA had this thing they called total compensation. They would send out to us and say, yeah, we're paying you the salary, but we're also doing all this other stuff. I think the problem is they added too many other things in that list, like the cafeteria and all these other things. But if they just focus on those things that were really true out of pocket, like matching on 401k plan, that's a pretty big expense for them, right? And you're getting that benefit, paying for your pension plan, paying for your health care. Most employers want their employees to know, hey, we're paying this on your behalf. If they're letting their employees know that and then they cut it, obviously the employers can say, well, now you can give me that money. So I think 90% or more would go to the employees. All right, here's his big argument. This is a big part of this paper. He argues, and you might try to back into this number, over your lifetime, you and your family will pay $1.77 million for healthcare. That's your insurance premiums, that's your Medicare that you pay, that's out of pocket that you pay for. 1.77 million, that's for you and your family, so it's not one person. So he's going to ask the question, if you were to tell every person in America, I'll give you 1.77 million today, would you spend it the way we're currently spending it, or would you spend it in a different way? What do you think most people would say? Now, if you spend it on other things besides healthcare and you get sick, you're dying in the streets. We tell them that. So they still have to worry about their healthcare. Do you think people will spend this money differently? Do they find a better way? Would they not go to the hospital as often? I take one guy I was working with, I was taking care of his health insurance. So we put him in a high deductible, and then we funded his health savings account. And he goes, oh, that's my money? Yeah, we're putting $5,000 in your health savings account. That's your money that you can spend in healthcare. But if you don't spend it on healthcare, you get to keep it. He immediately got a gym membership. It's like you say, if I don't go to the doctor, I get to keep that 5,000. Now that lasted like 3 weeks, but still, you saw him thinking, that's my money. I don't want to spend it on health and healthcare. I want to spend it on some other things. So that's what he's talking about. If we change how we spend this, would it actually change our behavior, and would we actually get better outcomes? Only a quarter would be paid by you directly, so you don't see but 25% of that. And most of that's after retirement. Probably 80–90% of your healthcare spending is going to come after you turn age 70. So a lot of it's going to be later in life. The rest we've spent by others on your behalf, deducted from your earnings before you see it. And that's why our healthcare system is so expensive. Questions on that? Do y'all believe this 177? I haven't actually tried to sit down and figure it out. Medicare is not nearly that high, but Medicare is probably $50,000 to $100,000 for most people. The health insurance your company pays could be $10,000 a year, and if you got multiple, kids. So I don't know. I haven't actually sat down to figure it out, but it's probably a pretty massive number. All right. What about the government? So remember the previous article said the government's not the solution. He's going to say something very similar to this, but I'm going to put this quote under the problems. It's right under the one I just did on information asymmetries. He doesn't say most government efforts to control costs have failed. He says all. Why is that? Because they don't control costs. They control prices. That's what the government thinks. I just mentioned Jimmy Carter. This was more Richard Nixon, but in the 70s, oil prices shot up, so gasoline prices shot up. And the government says, well, that's a problem. So they cap gas prices. So gas prices can't be more than $1.50. Guess what we suddenly had in the 70s? These massively long lines at the gas stations. Because if you tell a gas station you can't make money on gasoline, actually you're going to lose money on gasoline, they're not going to sell it. Why would they sell it? So they ran out of supply, and they had these massive lines. Why? Because government didn't focus on the cost problem. They focus on the price. They changed the price. You change prices, it doesn't affect. We saw that with Medicare, right? Medicare changed the price. What do doctors do? They just assign other procedures. They didn't do anything to reduce the cost of that procedure. They just paid the doctors less, and the doctor says, I can get around that. So listen to your politicians. When they talk about cutting costs, are they actually talking about cutting prices? Because cutting prices does nothing but distort supply and demand, and you end up with a disaster. Balloon continues to inflate. Cost control is a feature of this decentralized competitive markets. Why? Because competition is an incentive for innovation, which creates productivity and reduces costs. Hospitals do not have a strong incentive to innovate to reduce costs. They innovate to increase prices and increase services. Why are doctors moving to robotics for surgeries? Because they can charge more for it, not because it reduces costs. It's actually more expensive, but they have these new bells and whistles because they can charge more. So a competitive system, I love it when companies are fighting for my business. So I tell students, I hope Amazon's out of business in 5 years from now because someone better came along and just blew them away. I hope Walmart's out of business 5 years from now. I'd love for HEB to put Walmart completely out of business. HEB starts selling clothes and everything else. And I'd love for HEB to go out of business. Someone better come along. I know that's sacrilegious in San Antonio. I love competition. Fight for my business. Beg me to come into the store and buy something. And if I don't buy it, cut the price until I do. You're not going to see that with hospitals and pharmaceuticals. So governments are not going to cause systems to be more efficient. They're just going to distort. And I mentioned mandates before. It's a matter of incentives. It's not a matter of mandates. When governments mandate things, they just distort supply and demand. They usually make the system worse. So these distortions crop up constantly in healthcare. Although the population is aging rapidly, we have few physicians to address this. Why? Because Medicare's current reimbursement system does not making much money as a doctor for that group of people. If seniors were the true customers, they would likely flock, bidding up their rates and sending a useful signal to medical school students to become more of those type of doctors. Medicare is the real customer, and it pays whatever is asked for, and those specialists that make the most money from Medicare care, that's where doctors are going to go get training. They're not going to get training on those places where doctors can't make as much money. So what do seniors do? They end up using more specialists just because that's whom they can find and they can go to. I don't know if you've been in some doctor offices that just say, we no longer accept Medicare patients just for that purpose. They just can't make enough money on it. If you're going to propose Medicare for all, just keep this part in mind. What is it that the government can do that the private sector can't do? So a lot of people say, well, it gets rid of CEO pay, it gets rid of profits, but he's already argued that's a really small part of the equation. What can Medicare do to make people make hospitals and doctors more efficient? Now we saw with Biden, he did push, and this is something you could talk about in the paper. He did have a bill passed, both Trump and Biden were pushing this actually, to allow Medicare to negotiate prices on medication. We'll see how that comes out and how it works. If Medicare negotiates prices and not cost, we'll see how that works. But some people think that actually will be effective, and it will be interesting to see if that works. All right. The Medicare tax contributions and premiums that today beneficiaries have paid into the system don't come close to funding their care. The subsidy is getting larger, and as it becomes more difficult to maintain, next year there will be 3.7 workers. You saw this in your paper one. If you're in your 40s today, there will only be 2.4 workers to pay for your retirement. The experience of other rich nations should also make us skeptical. Nearly all developed countries are now struggling with rapidly rising healthcare costs, including those with a single payer system. So Medicare for all might address certain parts of this problem, but you're going to have to do Medicare for all with many other aspects if you're going to hit these other problems. The UK is having these same problems, and they have not just a single payer system, they even have a single system. All right, this one is kind of a gimme. Healthcare is excessively, this is almost one, if you just say it, you kind of get all the points. Excessive regulation. Yeah, if you can find a quote, but if you essentially talk about that, you'll essentially get full credit. So I'm not asking for much. I think we all know that. We don't need to really prove that. But he says, if you want to quote him here, healthcare is an exceptionally heavily regulated industry. Requirements form large barriers to entry for both new facilities and new vendors that could equip and supply them. Almost all of these regulations can be shaped over time by the powerful institutions. Have y'all heard of the phrase regulatory capture? That phrase sound familiar? So what that means is you go work for a major regulatory agency, the SEC, bank, healthcare, but you're not making that much money, but you really want to make a lot of money. How are you going to do that? You're going to move from that regulatory agency into private sector. But you're not going to do that if you're a really tough regulator. And so the industries capture their regulators, and essentially they become puppets for the industry. So a lot of this right here is probably all you need for that one part. The excessive regulation. If you just copy, especially the highlighted parts, but find something in there, and that would be enough to get you full credit on that one. All right, any questions on that? There are some gimmies in here that are pretty simple. mean, you could spend 20 pages on this, but I'd be pretty bored. And I think we all know our governments don't induce a lot of efficiency. And this is also part of that. Government can actually stifle competition. We're going to get into this more because you're seeing Apple, Google, or Alphabet, Amazon. You're seeing some of these big tech companies, even Costco, starting to do more healthcare kind of stuff. I love seeing Costco involved here. Costco, I haven't been in a Costco in forever, but you may notice in Costco, there's more healthcare related things that are leasing out of their business. The owner of the Mavericks, what is his name? Cuban, he's involved in this heavily. We'll talk about him. You're seeing some people outside of healthcare starting to get involved here. It makes me really excited. I love seeing these big tech companies getting involved because they want to make money and they're going to be efficient. They're going to figure out how to get the system to work. We'll talk about some of those. But right now, the government regulation is somewhat thwarting those efforts and making it much more difficult to do. With my doctor, I go see the doctor. They do a blood test. They look at the blood test. They come back and say, everything's fine. You can go home. So this last time they called, I said, can I go get the blood test and then do a phone call with you? Do I have to actually drive to your office? And they said, yeah, that's fine. And why did I think of that? Because during COVID, that's what we had to do. So before COVID, I would go to the doctor's office, sit there for 3 hours. The doctor would see me for 37 seconds and I would go home. With COVID, my Zoom was at 2 o'clock. At 2 o'clock, I was on Zoom. And at 2:10, I was off Zoom. So it went from 3 hours and 37 seconds to 10 minutes. Why don't we do that all the time? Why are we driving to doctors? Do you need to drive to a doctor if all he's going to do is look at the blood tests? I had one blood test done and I called the doctor and he said, oh, everything was fine. I said, yeah, what do you mean everything was fine? Can I actually see? No, you can't see the test, but if you drive over, we can hand it to you. Because of privacy concerns and all that. Okay, I'll drive all the way over, get this and look at it. No one to explain to me. Fortunately, I have a good friend who's a doctor. So I said, why do I have a star next to this one? What does that mean? Oh, don't worry about that. So extremely inefficient system. I hate it. I hate sitting. I fired one of my doctors because the last trip I sat there for 4 hours. Then saw the doctor. He came in with the wrong book. He said, Maria, I think everything's fine. I said, my name's not Maria. He says, oh, wait, that's the wrong file. Oh, you're Ron. Yeah, everything's fine. See you later. Waited 4 hours. And he said, oh, wait, we need a blood test. So then I went and got a blood test that I could have done while I was sitting there for the 4 hours. It's a system that cares nothing about my time. You'll see one quote in here. As consumers, we don't pay with our money. We pay with our time. An incredibly inefficient system. Could we fix it? Absolutely. Why don't we? Because doctors don't care. They don't make more money by making the system more efficient. Do I sound too cynical? Sorry. Since 1975, hospitals' enormous revenue growth has occurred despite a decline in number of hospital beds, no meaningful increase in admissions, and almost 50% decline in the average length of stay. High-tech equipment has been dispersed. Recovery periods after major procedures have shrunk. Pharmaceutical therapies have grown in importance. It sounds like more efficiency, and yet the system costs more today because this system knows how to charge money. A lot of hospitals just say, well, what about those people who are uninsured? They go to the ER and doctors say in our ER, man, that's the most expensive thing we have. Why is this the most expensive thing you have? Because they allocate a lot of frivolous costs to ER so that they can say helping the uninsured is our most expensive thing we do. They intentionally distort that cost. We're going to see one article that ERs are actually some of the most productive parts of hospitals, but you don't know it because of the way they allocate their costs. Extremely. Have you ever been to an ER, man? It's fast. Or like they shuffling you around, you're moving fast because they got people bleeding out in the parking lot. Pretty efficient, but you don't know it because hospitals want to say it's expensive because that's where the indigent care comes in. Indigent care doesn't go see regular doctors because they can't afford it. They show up at the ER. ERs are very productive, very efficient, but you don't know it. The public service providing is going to appear as high because they have an interest to shift costs to that part of their business. There's a politicking going on here for hospitals to protect their piece of the pie. So his father wasn't the customer, Medicare was. So they were going to do whatever they could to get the most money out of Medicare, not to make him healthy. The hospital was able to charge a lot more for his care if they hadn't given him the infection. He had pneumonia, which is pretty common for someone that age. But they gave him another disease on the way. The hospital discussed price only with the uninsured patients. They would discuss my potential copay only if I were applying for financial assistance. So the issue of costs rarely comes up. When I had my surgery, which I wish I hadn't had now, when I had my surgery, yeah, costs never came up. It cost me a few thousand after the fact, but we never talked about costs. I'm going to show you one article, which is really sad and funny, but the doctor or the medical administrator told this guy what he's going to cover, really expensive. They told him while he was on the gurney being rolled into surgery. He said, wait a minute, I'm not paying that. He had to negotiate prices while they were rolling him into surgery. Doesn't sound like a smart thing for anybody to do. But they keep, this is going to be an important one. You'll see that under the problems, one of the first ones. Yeah, lack of price transparency. They intentionally make it difficult. I'm going to show you some example medical bills here later. There's stuff on that you're like, what in the world is that? People are paying for stuff. It's like this one woman, she goes, yeah, I got charged X $1,000 for a doctor I don't remember ever meeting. They say he came into my room. I guess he did. I don't remember seeing, I never talked to him, and yet it cost me a few $1,000s. So keeping prices opaque sounds a lot like life insurance products that are so complex you can't understand what you're paying for. It's very, very similar. Everybody got that one? All right, so what about the other side? So let's talk this issue right here. Technology in every industry, except for healthcare, is reducing costs. In healthcare, technology, what do you think my next word is going to be? Technology increases costs when healthcare is paid for by insurance. Technology reduces costs when healthcare is paid out. Does that tell you something? Technology. Well, I had all the right letters in the wrong order. I don't know how my mind could even do that. Does that tell you something? And what I want you to do here is give an example. LASIK is one. Cosmetic surgery. No, that's not right. How do you spell cosmetic? There it is. Why? Because the LASIK and cosmetic surgery are often not covered by health insurance. And that's two areas where costs have come down quite dramatically. He gives an example of LASIK, which is a really good one. The surgery is seldom covered by insurance and exists in a competitive economy, typically of most other industries. So people who get LASIK act like consumers. A quote as low as $500 per eye, a decline of roughly 80%. So you could put that as your example. When insurance is involved, technology increased costs. When insurance is not involved, technology. So when insurance is not involved, healthcare acts like all other industries. There's actually a Business Week article. I don't know how true it was. I remember reading that LASIK surgery is going to be like $50 an eye by X date. I don't know how far we got in that. I've had LASIK. I paid for it through my health savings account. It's pretty amazing. It was kind of scary because I walked in and the electricity went out. And I was imagining that happening while they had my eyeball all bulged out. But I went in, it took a few minutes. It wasn't as uncomfortable as they said it was going to be. I went home, I was seeing 20/15. I don't see that now. I had horrible, horrible pain. So I had pain pills until I discovered that I had the goggles pinched to my ear. And then once I fixed that, I had no pain. I was able to see fine. This was a very, very different experience than I've had with hospitals and other places where health insurance. So keep that in mind. Is that proof, or is there some coincidence? There is something else going on. He's saying Insurance is the problem. So remember that. That's a big part of this discussion here. Now, I think the military is starting to cover LASIK now. So you're starting to see more health insurances covering LASIK. So that may mess up this equation for LASIK. So technology is driving up costs of hair care for the same reason the absence of forces that discipline even drive down prices everywhere else. Only in the bizarre parallel universe of healthcare could limiting supply be seen as a simple approach to keeping prices down. So why not comprehensive healthcare reform? He said this before: wasteful insurance, distortive incentives, bias toward treatment, moral hazard, hidden costs. He's essentially repeat himself. A service to the wrong customer. These are all the problems at the foundation of our healthcare system. Now, if you wanted to find a good quote to put in your intro, this would not be a bad one. So if you're trying to find a good kickoff, maybe you can find a better one later, but maybe kick this one into the intro as a one to shop from. It's a good summary of everything he's talking about and does cover quite a bit of it. The Obama administration and Congress are still working out the details. This was slightly pre-ACA, but it looks like the generation of comprehensive reform will not address these issues any more than previous efforts did. It's just going to be patches. Essentially what he's saying is it's going to throw more consumers into a broken system. I have the same opinion. I'm going to really get y'all mad at me for this. I have the same opinion when people say college education should be free, that taxpayers should pay for college education. We've already discovered what our college is going to do if it's free. They're going to jack up their prices. They're going to charge more. And there's already been studies that show when you do that, the people who benefit the most are the wealthy and the people who benefit the worst are the poor. Why? Because if it's free and it's covered, you no longer have to provide scholarships to people coming from poor neighborhoods. You can just look at test scores, which rich tend to do better because they have more money to spend on prep. It's the same type of distortion. When you say the government's going to pay for it, taxpayers are going to pay for it, it causes a lot more supply to go into, a lot more demand to go into a really, really broken system. Most of the benefits of technology. So here's the other side. You're going to notice technology is a problem and technology is a solution. Technology solution for digitizing the human body. So we have more information electronically. It irritates the life out of me. I have two doctors, endocrinologists, and I forget the other guy, what he is. They both want drug tests. They both want blood tests at almost the exact same time. And I'm like, why can't you just do one test and give it to two of them? Oh, we can't do that. And my one doctor, boy, the woman who was doing it, she hadn't been there very long. She had to try 4 times. And I had blood. I'm on blood thinners. It looked like a scene out of Law and Order. The opening scene. That's what it looked like. There's blood everywhere because she couldn't get it to work. I was like, couldn't you use the blood test I did just a week ago? It was a lot less bloody. So there's a lot of things we could do if doctors would just talk to each other, and that's going to be a big solution for Michael Porter. Is we got to get doctors talking to each other. He's going to propose something that looks really expensive. You'll see it in the video I want you all to watch. Where you're going to see a room full of specialists and dietitians and therapists talking about this patient to say, no, they don't need surgery. They should do this. That looks really expensive, but they avoid major medical procedures. He's talking about how can we get all the different players to talk to each other so that everything is integrated. And I'll give you some examples of that later. It's amazing how bad this system is. All right, we're going to get through this one. Trust me, this is the longest article. They're going to go much faster. We'll start here next time. Any comments, questions? Are y'all doing okay? Anybody finished your paper yet? Still working on it? So we'll keep going.